Hi, this is Randy Finney with Right Side of the Chart, and this is a mid-session update for Monday, April 27th, 2020. What we're going to do in this video is focus on the equity markets. We'll start out with the major stock index ETFs. We'll take a quick look at the futures, and then we'll wrap it up with the FAAMG stocks because that is probably the most important theme right now in the markets, I believe. The remainder of the market leading what I call FAAMG stocks, plus Intel is number 6, so sometimes I'll refer to them as FAAMGs with the I at the end. And we already have Intel reporting. So I'm going to go through those. We're going to look at the earnings dates because that will almost certainly set the trend for the market going forward. You know, what are we about? No, not even a quarter way through the FANG earnings. So we got quite a few of those coming up. So let's start out here in the markets and talk about the important levels. I probably should color code them here and make this one purple as well. So forget about that yellow line. That was important back then. I had that color coded back here as yellow. Right now, the purple lines are the ones we're going to focus on. I'm going to knock this one down a bit in color so it doesn't stand out so much. There we go. Now 218.43, give or take. Why? A couple reasons. Well, it's important price resistance. We had support back here. Quite a bit of support there. We fell through it and then we back tested that level. And this was remember what I called Powell's folly right there. That was the first emergency rate cut with a second one to follow, and that's where we stalled out right around that. And give or take, it's not a hard number, but we'll call it about that high, whatever that was that day, maybe 220. But that was a spike high, and we closed down below it, and then we closed around 218.50 or so right there. The following day we came and back tested that level. Why is that important to me? Well, if we take it out by a pretty wide margin, especially a solid close or a couple candlestick closes to put that in the rearview mirror like this, then that's going to have taken out that previous reaction. That was the first bear market rally right there. It was about a 10% kickback rally, and it would have taken that out. And so technically, although again, this is not the market. This is just pretty much a tech index, QQQ, the Nasdaq 100. And however, to take that previous reaction high out, it wouldn't mesh with a typical bear market scenario, counter trend rally with another leg down to come. So again, and I say this and I put a little bit of a caveat in there because that's not the market. We're going to get to the market here, but that is a big level for QQQ. And what it would entail, I can tell you, I know the market, you can only say it's bullish after it's rallied this much and it's holding up. But again, I cannot impress enough. It's really not going up or down for the last 3 weeks now. You can see, turn off all the lines. We're boxed in a trading range. And again, this is the cues. I'm going to get to SPY in a second. We'll look at the Dow. This is that recent trading range. So again, we're not going up. But we're not going down either, and that is now for going on 1, 2, I think it's 3, 2 weeks there on that range on QQQ. Almost 2 weeks there. So 13, we're on the 13th day. So there you go. And now when we look at SPY, you see the same thing, SPY. Right there, but although it's a longer range. So in SPY we have really from about this point right here, that reaction high, you see that's the bottom of the range, and that takes us out to 21 days. So there's, right there, we're at 3 weeks on that. And then again, just so you can see the boxed in range. Right about from that reaction there, you can see this is where SPY's been bouncing. So take it for what it's worth. You have to say during an uptrend, any consolidation in time or correction, we can call it a correction, sometimes you can refer to it, because I say there's two ways a security or a stock or a security, which is an index, a stock, anything is tradable. Two ways it can correct, either in price or in time, or a combination of both. And this is more so a time correction so far, but it's also a consolidation period, and from that will usually come a break in either direction. You have to watch out because this market's plagued with whipsaws. So, upside break, if it's quickly followed by a move down with impulsive selling, that would be what we call a false breakout or a failed breakout. Same thing to the downside. If we broke the bottom of the range and then rallied back up well into within the range and to the top of it, that could only be construed as near-term bullish, because that would be what we call a fake down or a failed breakdown, bear trap, whatever you want to call it. But until then, again, let's not read too much into this because we're spinning our wheels sideways right now. And a lot of that is, I think they're waiting on the fangs, which we're going to get to in a second. So let's just talk bigger picture real quick. Go back to the weekly chart here and talk about, where we're at in the market. Let me grab a board that I have here. Well, this is one of them. These are, my bear market targets. This was the first support target zone, which was hit, and with a brief momentum overshoot, and we kick back. And I always draw these arrows and zigzag patterns on, with multiple price targets, and that's the reason they're there. You come down, you hit the first one, you get a reaction, and then usually another wave down to the next target where you get a reaction, and so forth and so on. So we'll just, right now, that's still my preferred scenario, that we come in and test or really slightly undercut the recent lows back from March right there. If I can get the crosshairs on it. That's it right there. And as far as where we're at, with the markets, you can see that SPY, the S&P 500, I also laid out this potential big, it's kind of scary when you look at it that way from a very long-term perspective, potential broadening wedge pattern, aka megaphone pattern. And we are right between the 50% retracement, that's this line here, and the 61.8. So with your 40-week or 200-day moving average still above. So by, again, by all metrics so far, you can say what you want with the scope of the rally, but in as far as percentage terms, as far as where we're at in proximity to key moving averages and how much we've retraced here, like I said, in percentage terms, and you can't at this point say it's not anything more than a counter trend rally, aka bear market rally. In hindsight, certainly, if we move up here and we take out the previous highs, then yeah, you can say, well, that was the beginning of another V-shaped recovery, or who knows how it'll play out. But right now, there's not nearly enough evidence in the charts for me to say that's the case. QQQ has been the strongest index, but again, it's not really a well-balanced index. It's more of a tech fund with a 50 or so % technology weighting. It's not as diversified as the other indexes, and so we're above the 61.8 fib, a little shy of the 78.6. I'm just curious to see here if I put up the NASDAQ composite where we're at. I haven't done this yet. Let me throw up some fibs there and see where we're at on the NASDAQ composite. See, the NASDAQ composite, the NASDAQ 100, which we were on a minute ago, QQQ tracks the NASDAQ 100, that's the NDX. That's a basket of the 100 largest stocks, and so it's very top-heavy weighted to Apple, Amazon, Facebook, and those. And you can see the NASDAQ composite index, when you include the, I don't know what the exact number is, I believe it's in the thousands, that's only retraced 61, just over the 61%, 61.8% retracement. You can also look at QQQE, which takes out that heavy weighting. QQQE is the equal weighted NASDAQ 100, which takes the 100 companies within the NASDAQ 100 and applies an equal weighting to them instead of the very top heavy weighting that is actually exists in the NASDAQ 100 or QQQ. And you can see there we're right at that 61.8% Fibonacci retracement as well. The Dow Jones, this is DIA, the tracking ETF, we're at the 50% retracement. So again, same stuff. I don't want to beat a dead horse, but no, from the long-term charts now, we're looking at weekly charts, no technical changes, and you can see the candles where we were a month ago. This was the candle 4 weeks ago. We're just starting this candle now, but that one ended there, and that's where we got to. The Dow hit the 50% retracement. It hit it again the following week. It hit it again, and closed right on or about it each of the last 4 weeks here. 1, 2, 3, and we're starting week 4. So we'll see where this takes us, but that's where we're at right now. So I know you don't want to hear it, but no significant technical changes recently in the markets. Just the fact that it's kind of slogging around sideways. Okay, before we get to the futures, just to loop back around, to the levels that I think are, the most salient or, key levels, important levels to watch here. The uptrend line off the lows on the Qs, because again, although QQQ might not be as diversified as the rest of the market, when the Qs break, tech breaks, and when tech breaks, the markets break, because both the Dow and the S&P 500, although they are more diversified index, they're still both weighted about a quarter, 1/4 of their performance comes solely from the technology sector. And so we'll watch this closely. break of this trend line. And what I was going to say earlier, if I didn't say it, it looks as if, it feels as if with the market holding up and this bullish current kind of sentiment right now, that will probably make a run at that level, take out those previous highs. So when you get this close and you've been tapping on them, it's unusual not to see a pop, a pop up to those new highs, a stop clearing move, and what it would look like. This is the QQQ 60-minute chart. I'm going to make that line color it up here a little bit, because again, that's the probably the most important, single most important level to watch right now in QQQ. Again, it's the uptrend line off their lows. Pretty well defined too right now. Up to a couple weeks ago, we only had 2 reactions. Now we have 4, 5 distinct reactions on that trend line. I'm sorry, 1, 2, 3, even count all those candlesticks, 4 distinct reactions. And again, when you get this close, anything's possible, but I'd put better than a 50% chance that you run up and pop those highs, because there's probably a lot of stops set right there by shorts. A lot of longs will consider it a breakout, which it is, on face value if it sticks. Now, although you might ask, well, why wouldn't you cover your shorts and go long if you think we're going to pop it? Well, because it's about risk reward. I think if we do pop it, there are no guarantees that it's going to be a marginal pop. Might last a day or two, might even not even last a whole day. Pop up there. Next resistance is up here about 224.18, and what that would do is give us, you can see here, I'm just going to extend these divergences, simply extend the existing negative divergences. Right now this line really shouldn't be there because we haven't yet made a new high, but you can see I've already drawn out the lines that would come into play, the divergence lines, if that happens. So whether it does or doesn't, it doesn't change anything about the next sell signal coming on a break of this trend line there. But like I said, that would certainly fit well, because it would take us up within this bearish rising wedge to about from where we're at, about 2.6%. So it wouldn't be so fun to ride out if short. And then turn around from there. And of course there are no guarantees, but there is resistance, a big old gap right here. I'll move this here as a gap over here, 2 gaps really. So there's a gap right there, and these 2 lines, let me color them up as well. The top of that gap's about 224.18, so that should really kind of meshes too with what I showed you on the other chart. That should cap any upside advance in the Qs right there, if we get that. And then on SPY, I haven't decided yet, and I'm going to talk about the FAAMGs in a minute, whether I'm going to officially pull this stop again. I have patience, and I know some do, and that are listening to my voice, and I know others don't. So I'll leave that up to you whether or not I decide to temporarily suspend the stop, because we have a slew of market moving earning reports. In fact, I read it over the weekend. Is it 25% or more of all companies in the S&P 500, I think, report this week, or maybe all in the stock market total. It's a big earnings week, and it's really I don't know if they called it this, but I think this is what I would refer to as a hump week for earnings. Once we get over this is peak earnings week, in other words, and then after that it tapers off. So there's SPY right there. And no different as far as the technicals go. If it pops, this makes a marginal new high and takes us out of this trading range. It will be a divergent high. It'll look like this. We'll extend the divergence lines, and so nothing changes technically. So again, on this trade, it's still a short trade. We entered back here, 273 and change. We're slightly underwater, but not much in percentage terms. And based on the downside projections, I think it would be prudent to give a little bit more room on the stops. But if you're risk adverse, or you're at your max threshold, or you're just impatient and, hey, this is going nowhere, this market's not going to go down, it refuses to go down, and that's your mindset, sure, take your money out and out of SPY, and I don't know if you want to go long, that's up to you. Let me see if I have a line. Yeah, I did have a trend line right here. It was very, very small, and we did break that in SPY, but I always talk about this. I'm going to get to this in the futures in a second, that you have to watch both SPY and QQQ. So whereas SPY broke this trend line right here, let me color it up for you. Get rid of that, and nope. Get rid of that box here. color up that line I'm talking about in case you can't see it right there. So where SPY broke down, and again, we didn't really have that third confirming reaction. We had 1, 2 here, but we didn't have a third. We gapped down below it, so I'm not gonna, that's why it's colored down. It's not that significant. What's a little more significant now is this near-term uptrend line right here. I gave you that in the futures this morning. That's the one we have to watch right now. And so let's roll into the futures and talk about that. All right, NQ. So I always talk about a solid break and or 60-minute close when you're trading on the 60-minute time frame. And I also talk about, and that's why I post both ES and NQ, and that's why I usually post both SPY and QQQ charts, is because you need to see them both go. So what's happened today so far, pre-market, I mentioned these uptrend lines here. I don't know if this one got moved or what, but it's not fitting so good there. Let me play around with it here and try to get a better fit. Yeah, they got to come off these lows right here. Yeah, that fits a little bit better. So we're kind of flirting through it now, but you can see probably even better defined, more reactions than this. The uptrend line is that 88.31 level I also had on the chart, 88.3150 we're going to call it, rounded off, because we had a lot of reactions plus a gap back here. So again, we're looking at NQ, NASDAQ 100. There's a big old gap, and that gap, top of that gap and that level there contained that. We popped above it with a big green candle, and we're back testing now. So this is not a very convincing or impulsive breakdown at all. That was an impulsive breakdown right here. Follow through selling, what you want to see. Impulsive breakdown there, but this not so much so far. So we pretty much have to take out today's lows, and that may or may not happen, but I think it will. We got that bearish crossover I mentioned this morning. I showed you that. Look for these high-level clean bearish crossovers. See this? We tried to cross. It was a whipsaw. The lines flattened out right there, and then finally gave us definitive, clean crossover there. You can see it in the histogram as well down below. Here you didn't really have any clean separation of the lines on the histogram. There's another high level, and I'm talking, bearish crossovers that occur when the PPO is up high. See, it bounced right there, but then you got the crossover. Now let's just look what happened after that. Crossover, 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 and crossover. So that's why, said we'd get that, probably that sell signal today, this morning. We have. It's just, like I said, you need to get a little more oomph, a little more downside, but it is there. The sell signal is intact, so it's just not a screaming sell signal, if you will. And then more importantly, this is what I talk about, you saw NQ breakdown, but yet that breakdown on NQ kind of stalled out with very little follow through. We hit that support level I was just showing you. Well, what happened on ES was comparable. We moved below it, but essentially closed right back on it and a hair below it, and you can see right now that was not an impulsive. That's not a solid break or a solid 60-minute close below, and so far we've had a rally back up above that trend line, back testing this 28.68 50-ish level right now. So we need to see ES roll over as well. There's the bearish crossover, but it could prove to be a whipsaw if we go up much more. But the sell signal, as of now, it's still intact. Those lines have crossed. Again, I'm referring to the bearish PPO crossover. I'm going to show you those. Here's the last 4 right here. I'm circling, and you can see what happened with prices after those last 4 crossovers that occurred above the 0 line right there. This is what I think should happen right now based on that, but we'll see. Okay, now let's talk the FAAMGs, the market-leading FAAMG stocks, and again, I'll share with you my thoughts as to why I'm giving my my short index short positions a little more room for the time being. These guys will most likely determine where the market goes, because again, they are in both the NASDAQ 100 as well as the S&P 500, the top weighted components. So we have Microsoft here. Microsoft, you can see technically, broke this uptrend line right there off the lows. Might be able to draw a benefit of the doubt or a secondary trend line, but I right now that breakdown was impulsive. The line was fairly well defined, not super well defined, but there was an impulsive breakdown, and then moving a little higher sense. Sometimes you break down and that's it. Sometimes you kick back. But as I said, and I said it last week, I say it often during earnings season, stocks tend to go into a holding pattern. That's why you typically, as a swing trader, you don't establish new positions, long or short, in front of earnings because number one, the stock's likely to stall out. Any breakdowns or breakouts you might want to pass on because they'll prove to be often prove to be whipsaw signals because a stock tends to go into a holding pattern right before earnings as everyone's kind of wait and see. Microsoft reports after the market closes on April 29th. That's Wednesday night, I believe, Wednesday evening, and so we won't see until Thursday morning which way this one goes. So there's one of them. He has these previous highs up here. If it does pop to the upside, one thing to look for, just like on that 60-minute chart, these bearish PPO crossovers work just as well on the daily. You can see the PPO line rolling down. If it crosses down below that zero line there, that's a bearish crossover. The last time we had that on Microsoft was right here. And again, this is a daily time frame. So when you get these signals here, they're more powerful than what we were just looking at, and they last longer than the 60-minute chart. Stay away from the PPO when the lines are flattened out like this. Crossovers are going to be more, I'm trying to make X's, whipsaw signals. You can see the lines are kind of compressed there. Low volatility, sideways trading. That's when you don't want to use those kind of things. But when you have these trending markets and you get these clean, what I call clean separation between the two lines, and there's a bullish crossover. It goes both ways. I look for those bullish crossovers as buy signals, and that's what it told you down there. All right, so that's one, and that's April 29th. That's the largest publicly traded company, at least in the U.S. I don't know what Saudi Aramco is at now, but Microsoft's a $1.3 trillion company, with Apple right behind it at $1.2 trillion. There's Apple's uptrend line right there. Resistance around here where it's been stalling out lately. Next resistance level I don't have all the way up to about 303.65, so it's certainly a possibility if it gets there. They report on April 28th. That's Tuesday night, tomorrow night after the market closes. So this one will also likely set the tone for the tech sector and the stock market as a whole this week. Same story here. We haven't crossed over. PPO is in bullish territory and PPO lines above the zero line, but that's something we'll look for. And of course, break of the trend line as well. Amazon's way above trend. It's been the strongest FAANG stock since this whole mess started. Obviously, due to a lot of people shopping online. April 30th. So they're coming up as well. And again, I believe all these FAANGs, if I'm not mistaken, all report after the market closes. So these are ones to watch as well. Same story. If we do reverse, then look for these. Look for a bullish crossover on the PPO. All right, next up would be, and I'm going in a descending order of market cap. Next one up is Alphabet. We'll look at Class A shares. There's your uptrend line. So you have this similar story here. And again, I'm going to loop back to QQQ for a second. Same uptrend line, right? So when you see QQQ break this trend line and all of these FAANGs, and I would recommend to replicate those trend lines on your chart and set an alert so it'll tell you when they go off, and you'll see if one breaks, they'll probably all break within close proximity, but the more that break, the higher the chance that sell signal will stick. I use log scaling. Keep that in mind. If you're not using log scaling, you might get a slightly different trend line draw there. So just that's something to keep in mind. All right, and then next up, let me go back to QQQ so I can sort them by market cap here. I have a watch list on another page. There's Facebook. Facebook is walking its way up within this price channel, April 29th. So that's Wednesday evening as well. So you get the common theme where you have a lot of these, or really the rest of the FAANGs, or all of them, I should say, the ones that reported that these were up to here. This is the fifth largest component of QQQ, or the NASDAQ 100. We already had Intel report. King of the Semis reported on April 23rd after the market closed. That was this line here. The following day, it traded down, caught support right there. So now that's a big level to watch. That was where they traded after earnings, and what I see, that's a big level right here. Look at all these reactions. Reactions from above, gap right there. That's what contained the pullback right here. We consolidate on that level back there, and most importantly, you want to put a higher weighting into the recent price action, because had we traded on through that $56 level quite a bit recently, it would take away from the validity or the importance of that level. However, boom, 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 boom. So you want to know when the semis are going to issue a pretty big sell signal, especially Intel, is right here. So I'm going to round it down to 56, and I'm going to set an alert on that line to let me know in case I'm not paying attention. So I'll know what it is when I see it. I don't need to add a description. And so look, where we're at is here's Intel, king of the semis. They reported. They sold down. We're back to about where we were before they started. We're down again today. So we're a little bit below where we closed, right around where we closed just before they reported. Last time they reported, remember, they popped up. Huge rally. Everyone, great earnings. But they sold it. And, from that earnings pop, from the top of that pop, the stock fell 37%. So right now, I think it's holding up in line with the broad market, probably waiting to see which direction the rest of the FAANGs are going to take this market. And we know we had Netflix also report blowout quarter. Everybody's signing up to watch, Netflix shows when they're staying at home, but yet the stock has, that was the climax so far in the stock, and it's drifted lower. Nothing big, but here's a potential trend line to watch. I call it potential because we have the initial reaction on the lows. Two candles there, but I'm going to call that a second reaction, even though they're 2 different days. It's more of a cluster. That's what I look for in these. I consider that one reaction, and finally a breakdown of that trend line. And so, well, we pretty much hit it yesterday. We're trading on it today, and just here's a level to watch. And again, the story is, if you want to just replicate all these, set alerts on those FAANG stocks, whether it's a trendline support or price support. Where does Netflix go if and when that breaks? Whether we get another jog up and it breaks it at higher levels down the road, or whether we break down soon. You can see this was a big level here. 380, 381, a level that I would put very, very good odds it's going to be back tested. That was a multi-year big level. We had a false breakout above it there, and that's what I call the golden shorting line. Actually, we first shorted it officially here, officially there again, and unofficially each and every other time that hit it. This last time around, I kind of held off with the whole COVID thing going on. I didn't short it again this time because the surge that they've been seeing. Again, this was one of the beneficiaries of COVID with everybody staying home. So, however, there it is. And where I'm going with that is, breakout like this, based on the posture of the charts, PPO starting to roll over. We're oversold, just like oversold last time. Oversold here, divergence. And so I think Netflix will come in at the very least to backtest that. If it does more than just backtest it, like it did here where it broke out, that really wasn't a level back then. So I'm not going to call this a false breakout, because that resistance line started here after the gap. That's where I added that golden shorting line, and then it acted as resistance. Back here, that was an all-time high, but we had never really had an established resistance level there. So, but we have certainly since. So there's a level that if Netflix goes well below that, what that means is then this will be a failed breakout, false breakout, aka bull trap, and quite likely bring the stock down much lower. And that is it. All right, just to reiterate, that's my preferred scenario, is that whether or not we get one more thrust up, and again, it's it's relatively minor, in the scope of things there, upside. But it wouldn't surprise me in the least that if we broke down earlier. So like I said, not the time right now to be getting aggressively short. My plan's kind of sit tight on what I have, wait for this sell signal, whether we get a breakdown today, tomorrow, next week. Probably is not going to happen until later this week after some of these FAANGs report. And even if we did get the breakdown, here's the thing, guys, you have to also take it with a little bit of a grain of salt, because you're going to have the big FAANGs reporting this week. So that could lead to a whipsaw signal, just as a pop up here. A breakout above these recent highs could lead to a whipsaw signal, and that's what I favor. That's why I'd say slightly better odds that we're going to maybe get another thrust up in here, then break down. But again, not worth gaming it because there's not enough upside potential if it does happen compared to the downside risk of a sudden breakdown and drop below those levels. But until the FAANGs are out of the way, unlikely to see the market head down pretty hard, but anything's possible. And when it does break down First target 203 and change, about 203 and a quarter. Second target 193.50ish, we'll call it. So there's your targets on the Qs, and then nothing's changed on SPY. That's still an official trade. And like I said, whether I decide to extend the stop for another day, do your own thing. If you're not comfortable with it, if you're getting frustrated, take it out, close it out if that's what you want to do, and you can always get back in when you, I don't know, right now this chart's not as clear to me as QQQ, and that's why I'm focusing on the Qs and that trend line. We don't have a very clear trend line to draw, but I can tell you, as I've maintained, that a break below 273.39, well, I think would be a pretty powerful sell signal. So that's what you want to look for. That's our multi-week trading range right there, well-defined support. And if I don't have it already, I'm going to set an alert there as well. So when I have, I think there'll be one day in the near future where it'll be like popcorn. I just set several alerts. You're going to see those trend lines break. You're going to see 273.39 SPY break. And then after that, you're not going to see these little wimpy candles here. You're going to see, I think, either a big old gap like this or some bigger impulsive red candles. And again, whether that entails a marginal new high from here and a breakout above these levels or not. All right, we'll wrap it up here and get it out to you guys. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.